B Corps, ESG funds, transparent supply chains. I looked into all of it. Claude and I had a really long conversation, and I wanted to share what I found with y'all. Give y'all some context for what I'm finding with ESG funds and like the S&P 500 situation as an ethical investor. Um, it's a kerfuffle to say the least. Because every single one of us with any kind of a brokerage account, a retirement fund, anything, any sort of conscious investor that's like educated investor, like you have some kind of education on money, you know the power of what the stock market can do for compounding our investments and how that is one of the most accessible ways to build wealth in our day and age. However, not many, if any, of the companies that are available to be bought in terms of stocks um, are what we would think as remotely ethical. And so I kind of realized this. I was like, wait, hang tight. Actually, I don't think any of these companies are ethical. And I decided, you know what, let's have a conversation with Claude and break this down and see if what I was thinking was actually supported by evidence or if I was just being my little anti-capitalist, like skeptical self. I wanted to actually like look and try and back up my beliefs with the research. And so I was like, let's talk this through, Claude. Let's figure this out. And so I wanted to share where I started, how the conversation progressed, and where I am sitting now with all of this. I started by acknowledging, I was like, okay, Claude, I think I know that companies in the S&P 500 contribute to global exploitation and injustice. I think this is a truth that I know to be true. Um, and so I can't exactly avoid, like, if I invest in the S&P 500 in any way, I can't exactly avoid supporting companies that are backing global exploitation and injustice across the planet. But I'm not actually sure. So, are there any companies that I can invest in that have more transparent supply chains? That was my first question. And I started with transparent supply chains because typically, if you are talking about your supply chain publicly, like if you are sharing the entire sort of process from raw material to manufacturing to getting it to market to the like end of a life cycle of your product, typically if you're sharing that full like ecosystem, you are less likely to have dirt on your company, because if you do have dirt, you don't share it. You don't air your dirty laundry, you know? So I was like, okay, if I ask for a transparent supply chain, I'm more likely to avoid things like human exploitation, labor issues like modern day slave labor, child labor, etc. And I'm more likely to avoid issues like environmental exploitation and environmental degradation. And those are two of the top things that are at the top of my list when it comes to thinking about ethical companies to invest in. Because if you consider the idea of like, which is, I think, core to so many ecological and ethical sort of business frameworks, the idea of a closed loop system where from the sourcing of the material to the manufacturing of the sourcing of material and ingredients to make the product, to the manufacturing of said products, to getting the product to market, to what happens when the product is at the end of its life cycle and the end of its usefulness, having a fully closed loop so that the actual the product, whatever it looks like at the end of its life cycle, actually becomes the raw material for the beginning of that life cycle. That's what a closed loop ecosystem typically looks like when it comes to a business creating a product for market. And so if you can have a closed loop system, that would be mind-bogglingly amazing. But as far as I know, I don't know of any companies that actually have that. Very few, if any, do. And actually, I maybe should do some research into like what companies have a closed loop ecosystem, because, and if they are open for investment, because that would be really interesting to like find out. But in any case, these closed loop systems, particularly in relation to companies creating products for market use for our consumption, right? They, if they can publicly share that this is our supply chain, this is our system, this is how it works, there's usually high ethics involved. People aren't transparently sharing their supply chain if they don't know everything that happens from raw material straight back to the end of the product. And even those who share a supply chain that maybe goes to market and they don't like address the end of the life cycle of the product, that's still of concern, but better in terms of the fact that they are actually sharing their supply chain. So many companies are completely incapable of sharing their supply chain because they know how dirty it is. They know if they actually told us where they were getting their raw materials, who they were hiring, and the conditions under which those people worked, what labor laws and environmental laws they were exploiting to do this manufacturing and harvesting of this raw material, how they got the product to market, and like the exploitation of a market to sell that product, and any kind of neocolonialism issues that might be happening there, in addition to how they deal with the product at the end of its life cycle, if they even touch it, and how they deal with that. Like, no, I need to find out if any company is doing that, because if like it's so rare. It's so rare, y'all. It's extremely rare. And it so I thought, okay, if I can find a company that's doing that, even if they're not clean all the way, at least they're publishing their results, they're publishing what their supply chain looks like, and they're publishing how they plan to improve, right? Then that's better than nothing. So for example, a chocolate company, a small farm chocolate company, single what do they call that? Single estate, single origin. I'm not sure. I forgot the phrasing right now. But like fair trade and all those labels that we normally see on a product like that, they can tell you, okay, my cocoa was farmed in this place under these conditions. It was manufactured in this place by these people. Here's what they're paid. Here's the conditions under which they work. Here is what we're still working on to improve with this manufacturing process because it does this to the environment and we don't like that. Here's how we get the product to market. Here's how the profits from that product link back to the community and benefit the community from which the raw materials were produced, and the community within which are the workers who help to manufacture this product. And then at the end of its life cycle, this is what we do with the packaging or something like that, right? Like that kind of a company would be a closed loop system. That supply chain all the way to like the end of the life cycle of the product, closed loop system. And so I am just like, okay, if I can find a company that is at least publishing their supply chain, we would be in good stead. Or when I say good stead, I don't mean it's necessarily abiding by all the ethics that I would have, but at the very least, they are transparent about where they're at and where they're not at. Particularly because there's so much greenwashing of companies that are bundled within ESG funds. Because what usually will happen is there's like some kind of conflict of interest with reporting, or they will score high on one like rating and score low on the others, but they use the high rating in one area to boost the others and boost their score in general. Because, for example, they might score high on like governance, right? And with governance, it doesn't mean that you actually implement the policies that you have on file. It just means you have them. And so you might have all the policies of a company that says that it cares about its workers and it cares about the planet and it cares about the downstream effects of like the product getting to market, right? You might check all the boxes in terms of policies on your books. But whether or not you are implementing those policies is a whole other question. And you might not be implementing those policies, which then means that you have inflated your governance score. But in terms of actual on-the-ground impact, you might be in the negative. So, but your score might be great in terms of like assessing things like I think there's this organization that's called, I think it's called Know the Chain or something like that. I'll put the link in the description so y'all can check that out. But like in terms of that company assessing a supply chain and accessing an ecosystem of production, like you might be doing well in one area, but horrible in every other area. But it looks like you're doing well overall. And so you have this marketing message of like, we are a green company, and you greenwash the company only because you talk a big talk, not because on the ground, your policies actually mean something and make a difference in terms of how you affect the environment and how you affect the people working for you and how you affect the local economy and the community within which you source and manufacture your goods. And so greenwashing is prevalent with ESG funds and with companies in general that want to make themselves look more environmentally friendly or labor friendly, more fair trade friendly, whatever it is. And so I was like, okay, well, I want to understand as much as I can a transparent supply chain, like across all of the possible metrics. How are these companies in the S&P 500 scoring? Y'all, this is what Claude gave me back. The average tech company in the S&P 500 is scoring 20 out of 100 in terms of efforts to address supply chain, forced labor, and other issues related to exploitation and clean supply chains. Not even talking closed loop systems here, just talking a clean supply chain. And only 3 companies, specifically tech companies, scored above 50 out of 100. Now, I don't know what y'all, but 50% is a failing grade. Okay? So I was like, okay, obviously we can't get good, right? We're not going to get good out of the S&P 500. So maybe we shoot for like the best of all the evil options. So I was like, okay, so of these 3 that scored 50%, what are we looking at? What are their gaps? What are their issues? At least they don't have, they scored okay on efforts to address supply chain issues like forced labor and other things. And when I say note, I said efforts to address, not actually like changing. So let's dive into these 3 companies. Let's see what I can find, right? And Claude actually gave me a list of about 5, 7, maybe even 10 companies that didn't score the 50%, but scored in and around that 50%. And so I named them, right? I'm not going to disclose names here. Y'all can go do the research for yourself. But suffice it to say, it's big companies. It's companies that we are well aware of, right? One, so I took a bit of a deep dive. I was like, okay, what are these companies' gaps? What are they missing? What do they not have in place why their score can't get above 53%? So, but one company it's the same hardware issue and raw materials issue that every tech company deals with is sourcing of materials. Semiconductors within the chips that they use and in just any kind of hardware setup require minerals, cobalt, tin, tungsten, things like that. And the sourcing of those raw materials is well documented to be based on forced labor within conflict zones, and particularly in the Democratic Republic of Congo. And people who mine these materials from the earth never actually see the benefits of their labor. If I don't know what you call that besides neocolonialism and modern day slavery. It's a plantation, is what it is. And child labor is huge in these areas. So the biggest gap for a lot of these like tech companies is this. But in addition to that, for the manufacturing of their goods. So that was like the sourcing, the raw materials. For the manufacturing of the stuff that they're making, they're doing a lot of their manufacturing in regions that do not have labor laws that support workers. And actually, where labor organizing is restricted or explicitly suppressed in some areas. And so there's no worker voice. The workers don't have any level of rights, and there's no policy on the books that would give them those rights. And so what it actually looks like in these manufacturing companies is questionable. And they don't disclose it, which leaves us to imagine the worst things possible. And there have been documentaries that show us what sweatshops look like. We are very well aware, right? And again, how much access these people have to the goods that they play a huge part in manufacturing, questionable. So we've looked at, we've checked the boxes of like, okay, raw material sourcing, failing grade, manufacturing and labor, failing grade. But there's still other gaps here because another company that scored high 50% still failing grade, right? For them, they were fully aware that the products that they were manufacturing, as a matter of fact, they had massive contracts were with these people that they were employed by, and their products were being used as a part of population suppression and surveillance of citizens. And these citizens were targeted for things like for a plethora of human rights abuses, for torture, for forced arrest, for detention, and for like death. And so when you have a company that is fully aware that their products are being used in this way and they contract intentionally, like they know they have contracted with these, whether it's governments or organizations, for their products to be used in this way, and they're okay with that, it's a massive ethical issue, right? Um, so so not only are we thinking of okay, failing grade in raw materials and failing grade in manufacturing, but in terms of like actually how these products get to market and their impacts once they're in the market, particularly from the perspective of you have a huge contract with this person, with this government, with this organization who is using your products in this way, and you know, like we have documented evidence that you know. Don't know if that's not don't know, not a company that I want to be in, like investing in. Because I'm literally profiting low key off the torture of citizens in other countries. Okay, fine. Failing grade in all of those three areas. Let's say we look at a software company, right? They're not making hardware, they're not doing all that software, right? Also massive gaps there because again, if we're looking at cloud services for things like governments or massive organizations that governments contract with, what do these governments use those contracts for? A particular company got in trouble, like with the public, because we found out that their tools were being used by ICE. And they were cool with that. As a matter of fact, they protected that contract. And when they had the opportunity to contract with a nonprofit that was actually helping immigrants and helping them in a legal way, they refused and said it was a conflict of interest, and they protected their contract with ICE, and we know what ICE has been doing in the United States. And so I'm just like, all right, across the board. And I haven't even touched like what these products look like at the end of their life cycle, right? We haven't touched that. So across the board, failing grade for any like tech company or otherwise in the S&P 500, fine. What if I don't do like um like in my 401k, in my target date form, whatever that looks like, I don't do any of these companies. What if I just decide to do bonds, let's say? Okay, but bonds are sold by governments. And if you're lending to a government, what are they using your money for? They're not necessarily using your money to build schools and roads and to help like the vulnerable populations. They're gutting things like social security and social welfare programs and spending all of their money where? Military, corruption, and propping up cronies and who submit contracts not under like proper legal channels. Like, bruh. So you might be very well funding a genocide with your 401k if you decide to like go straight bonds. So I'm like, okay, if we're not doing bonds or we're not doing stocks, maybe there's another angle here that I'm not considering. What about B Corps? Is the next question I ask, because I know that like the B Lab certification has, well, I thought at the time of me having this conversation, I was like, okay, maybe it has a fair enough track record that this could be something that I could say, okay, let me cherry pick, right? Let me cherry pick companies that have the B Corp certification on the stock market. First of all, very few are on the stock market because you can't, like any company on the stock market has the responsibility to its shareholders to maximize profit, right? And so that directly comes into contact, or rather into conflict with the B Corp standards. Like immediately they clash, because maximizing profit does not equal no exploitation, does not equal human rights and fair labor, does not equal lack of exploitation of the planet. Maximizing profit, in fact, often is synonymous with exploitation of the planet, with unfair labor practices and unjust and labor practices, modern day slavery, child labor, etc. And is synonymous with draining communities for all their worth. So, like, not a lot of B Corps on the stock market to invest in. And I was like, okay, cool, noted. But Claude also brought up that the fact of the matter is the B Corp certification itself is in question, which in my head had been the gold standard for ethical companies up until this point. But there was this massive, several companies were given B Corp certifications that were not supposed to be, bottom line, because when you look at how the companies are run or who their parent companies are and the atrocities that they are responsible for on the ground in a variety of countries, then you realize, no, this is not it. This is not it. And in 2025, I believe it was, Dr. Bronner, the company, left. They were, I think, if I'm remembering correctly, they were the highest scoring certified B Corp company. So out of all of the companies that were B Lab certified with the B Corp certification, they received the highest score, multiple years running, actually. I think it was like 260 over 200 or something like that. So they got the highest scores years running, but they left. They decided not to renew their B Corp certification because they were like, look, the standing of this certification has dropped. And this is not, like, we cannot stand beside this anymore. So the B Corp certification took a massive hit because it's like, okay, if like basically the public can't trust you. And when you when you do some research into how B corporations are actually certified and what the verification process is, you start to realize, oh, there's lots of ways to game this system, because not only is there no on the ground implementation assessment, it's all done by self-reporting, one, but also two, when you look at the fact that um you, like, again, it's a situation where you can game the system because they had several like areas that they graded you in, right? And so if you did exceptionally well in one area, it would hide like abysmal grades in other areas. And that's how so many of these companies skated in and got their B Corp certification, was because they did that. They gamed the system. And so the company was like, no, we're not doing this. we're leaving. Peace out. The good thing about this though is that B Lab, the organization that does the B Corp certification, has come out and said, okay, we hear you, we agree, and we're going to be making changes. And so they have overhauled their entire process. You can no longer, it's not like your overall grade was based on like a cumulative grade across multiple areas. It's now that you have to have certain things in place to even have the certification across multiple areas. You can't have one and not have the rest and still get certified. You have to have them all. And so they are taking steps to change what their certification looks like. And they have started, I think, as of February of 2026, this year, they have opened up applications for companies to renew their certification under these new guidelines. From what I understand, companies can apply for a waiver of these new standards, but they do have to comply by 2027. By 2027, every B Corp certified company will have to apply by these new standards. I would, again, be curious to find out, like, do some additional research on what these standards are. But suffice it to say, as it stands right now, like, until this processes and moves through the entire B Corp system, the public doesn't actually know if this B corporation is compromised and just gamed the system or actually got in legitimately. I don't actually know if you can even research the report of like how the company got B Corp certified and what their grades were across multiple areas. Maybe you can. Um, but suffice it to say, not a lot of them are on the stock market, and even the ones that are, the B Corp certification is questionable. So by the time I ended this conversation, I was tired. I was really, really tired. I was just like, are you kidding me? Oh my gosh. Okay. And I I had to sit with the fact that any kind of stock market investment that I make in terms of building my wealth and growing wealth in my personal life was tainted. And Claude brought up a few things for me that I wanted to weigh here publicly and let you know what I think about them, right? Because first off, Claude brought up the fact that, like, when we buy shares on the stock market, we're not buying them from the company usually. We're buying them from people who bought like shares in the IPO or the fundraising round, or bought shares from people who bought shares in the IPO or the fundraising round. So it, like, our money doesn't go to the company directly, it goes to the shareholder, which was helpful for me to remember, because I think it's very easy to think to yourself, well, I'm buying shares in this company, which means my money goes toward the company and is supporting the company. That's not quite how it works. Or like, our money actually goes to the person who held the stock before us. um However, that being said, what the stocks trade for affects, like, that stock price affects like executive compensation, affects the valuation of the company, makes it easier for the company to raise additional funds or do like have leverage in multiple areas in terms of funding and access to money to run its operations, right? So my investment is not the same as handing the company cash. Like, me, like, having that company in an ETF that I am invested in, or in the S&P 500, or in my target date fund, in my 401k, like, that is not me handing that company my money, but it is playing into the system that enables the company to continue its exploitation. And I'm just like, okay, yeah, sure, it's not handing the company money, but it's still contributing to the system. And I know, again, I said this in a previous video and I want to say it here. I understand that my measly amount that I own in whatever stocks, whatever company has these stocks, it's very small, right? I acknowledge that. At the same time, this is not just about how my money affects the company, because my money is a drop in the bucket to that big, massive multinational corporation. What it is more about is what I want to support with my money and where my ethics and my values stand. And whether or not, now that my eyes are open and I understand what I am supporting and contributing to, whether or not I can say with my whole chest, real proud, yeah, this company is in my stock portfolio. Yeah, this company is in my 401k, and its returns and the prices of its stocks will contribute to my net worth. Knowing that this company is playing a huge role in things like torture on the ground in other countries, modern day slave labor in other countries, a massive exploitation of the planet, neocolonialism, like understanding that this company is playing a role in those things, and I am profiting off of its ability to do that. Can I stand with full conviction and be proud of that and own that and be like, yeah, this is good? No. I mean, I can't. And I'm sharing this video and sharing this information and sharing my journey with this because my ethics and your ethics are very different, right? I'm not saying that your ethics should be mine. So you might disagree with me. You might be like, Chelsea, I'm okay with saying that. I'm okay with saying it. And the reason why I'm okay with saying it is because my returns from the stock market and my investments, I will actually spend that in ways that I feel good about, even if it was procured and attained in ways that I don't feel good about. And you might say that that is enough for you to be able to say, okay, I'm okay with investing in these companies, right? However, I want you to walk in eyes open. I want you to be aware of what the source of your retirement money is coming from, of where your brokerage money is coming from, what you are actually standing with and standing side by side with, like shoulder to shoulder. What are you supporting with your investments? Like, I want you to walk in with your eyes open and make that decision intentionally and consciously. And then maybe, I hope, I hope that as you see that, if you decide to continue investing in this way, the money that you earn in your 401k, when you withdraw that, or that you earn as like dividends, if you earn dividends on your investments, what you earn in your brokerage account, what your net worth allows you to do in terms of leveraging financing in the market, I hope that you intentionally in some way target the evils that these companies that you invest in perpetuate. I hope that you do. I don't know that you will, obviously, because I don't know you, I don't know your life, but I hope that you, knowing what your investments are and like encouraging and facilitating, I would hope that you from there decide, okay, whatever I earn, a portion of that will be targeting some of these issues in specific ways. Because there is that argument. There is the argument, and this is the second argument that Claude brought up for me. There is the argument of like the best ethical use of higher returns is to earn them and then redirect them. Redirect the surplus to causes that you believe in, right? I'm going to read what it said here. A person earning 8% who gives away 3% may do more material good than a person earning 2% who gives away nothing. Or a person not earning returns who is not able to give away anything, right? Because they're not earning a lot. And I hear that. Me personally, that's not enough for me. I don't want to have any part with modern day slavery, with exploitation of the planet, with torture of human beings. I cannot, y'all. And I think this is where like my faith stands up in me, and I'm just like, yeah, I can't. Cause I will be held account. I will be held to account with how I use the resources that I was blessed with. And on the day of the Lord, when Jesus asked me and held and holds me to account with the money that he gave me, I do not feel like I can stand up in front of him fully justified and say, I invested my money in companies that I knew perpetuated modern day slavery, contributed actively to human rights violations and treating human beings in the most deplorable ways, including violating their rights to privacy, targeting them for surveillance and torture, and death. I can't stand up before Jesus and say that. I don't think that's something that I can personally do. And so I have a very, very, very hard time um quixing that argument. Like it doesn't work for me. It might work for you. It doesn't work for me. Okay. Um so I am still in limbo about like what I even do with the investments that I have in the stock market right now, because I'm just like, quite frankly, y'all, I don't have a ton of financial luxury to invest in other areas. So I do still need to do some research about like what other avenues for wealth building and multiplying investments are available that are more ethical. Maybe investing directly in certain companies. But again, then you have the issues of like, is that company actually even going to be here when I'm ready to retire? When I'm ready to like earn wealth and cash out, or do I actually have to start more actively watching stock prices and deciding when to buy versus sell? And we all know gaming the market and like doing that kind of thing doesn't net you the return that you think you'll get. So the set it and forget it method is the best way over time. But like I don't know, y'all. So this was the third argument that Claude brought up for me. It was this argument of like participating in these systems, even indirectly, normalizes and sustains them. And yeah, that is it. That is it for me. I literally can't sit here and do that. Um, so I don't know. I'm sitting in a really tense place. But this was my conversation with Claude that really exposed um the reality of all of my options and had me ask the question, what am I willing to do and not do? What am I willing to stand with and not stand with? What am I willing to say that my resources are associated with, my money is associated with, and not willing to say that my money is associated with? Um, and once I understood what was at stake, once I understood the gaps that these companies had, then I could make an informed decision, a decision with my eyes wide open to say, okay, I would be giving up the compounding and giving up the possibility of like the easiest way to financial security, particularly in retirement, particularly for my work optional goals. I would be giving that up. But I cannot sit here and be okay with my money normalizing and being a part of encouraging these systems. Um, so yeah, y'all. If this is the first time that you are hearing this, now that you have been now that your eyes have been opened, what do you think? If this is not the first time that you are hearing this and you wrestle with these things, have you had conversations with Claude about this? Have you done research on this? By the way, y'all, I do want to also share, I'm going to put this in the description box below as well. There is this company, and actually, I don't even know if it's a company. I think it's a company. But they are called Machinely. I'm not sure how to pronounce that, but they have like a search engine of over 6,000 companies that have been scored on different ratings. And a lot of the research that I had with Claude came from this website. Now, keeping in mind, these scores are AI scores. So there is some possibility of like, not everything is all checked and balanced completely. But this is also all based on public evidence, like published findings in relation to these companies, based on journalism, based on like the own company's reports, that sort of thing. So we have actual evidence that was analyzed and therefore used to rank and rate these companies. And there are a bunch of different other metrics. So I'll give a list in the description box as well. So y'all can go and do your own research if that's something that you want to do to become even further educated, informed, and therefore make decisions on how you want to approach becoming work optional and the vehicle for wealth building that you want to use to do that, or investing for retirement. And if you have certain money goals around your retirement and how you get to those money goals, if you want to use the stock market, like then you'll be able to make some more concrete, and when I say concrete, I do mean just informed, intentional, conscious decisions about how you go about this. All right, y'all. So if you haven't done this research, where are you sitting right now? If you have done this research, I am also curious as to where you're sitting right now. Um, and yeah, sound off in the comments. I want to hear more. Um, if you are interested in ethical investing, in this kind of stuff, as I go on my journey with this, I'll be sharing more about what I'm finding, how I'm thinking, how I'm navigating this. So feel free to like subscribe, because we have several other videos actually about this. Well, not several, I think it's probably like 2 or 3, but we're going to be talking about this a lot more as the days and weeks continue. So feel free to subscribe and hang around. Sound off in the comments. I look forward to reading your experiences and your thoughts and where you're sitting. And thank you so much for joining me for this video. I will see you in the next one, y'all. Take care.